Hey guys, it's Friday morning, 11:30, and this is the Q&A for the week, the Friday Q&A. I'll be doing this every week, trying to anyways. I should be able to squeeze these in. It's not too big a deal. Um, I got a few questions sent to me. A lot of it was just kind of just review, so I'll do that, and a few other questions about other strategies, expert advisors, that kind of stuff. So the main kind of question, and I got a bunch of overlap on this one, was the targets and stops that I've been using and that whole flat trade thing. So I took this trade, I think it was on the 18th, or check the blog. Yeah, January 18th. And I'll just put in the hidden divergence. Hopefully you guys were able to spot it beforehand. So it's a pretty obvious one. Real obvious. And again, you know, in the main manual that when you signed up, I mentioned that you could get in on this break here, and that's not a bad entry. Um, I like the I like the cross of the stochastics, which in this case, I mean, it's often, very often, the same entry. Your price is going to vary a couple of pips here and there, but for the most part, breaking that little trend line as an entry or getting in on the stochastic cross entry is going to be about the same price. So, I'm not going to debate which one is better, because at the end of the day, it's basically the same. You're getting it at the same price. So, to each your own there. Whatever you feel more comfortable with, and that's fine. That's what it's all about. And then, I really like that swing low, just a little bit below that swing low, like 2 pips is usually what I'm after. I don't want to put it just 1 pip, maybe 2, maybe 3, but 2's typical, below that swing low. This being the swing low. And then because I want to do a 1-to-1 risk reward, that determines my target. So, whatever price I get in at, I set my stop first, and then I say, okay, that ended up to be a 13 pip stop. Conversely, I got to take a 13 pip profit. Okay, so that's what I've been doing. I'm comfortable with that. It's been working. It works. So that's what I'm after. That's what I'm doing. Now the break even, the stop, the break even after it's gone your way a certain amount. I really don't have a hard number to give you, whether it's 2 pips away from your target, 1 pip away from your target. Um, yeah, I just don't. What what typically happens is it ends up to be 2-3 pips away, um, because it's run up hard. Like in this instance, it's gone up pretty, big full green bars, and this is range bars as well, this chart. So these are full green bars. There's not a lot of wick, so the price goes up, closes, moves over, prints, price goes up, and so that just keeps happening. So when I see that strong run up towards my target, I think great. I'm expecting to get filled on the next little candle, the 8 pip candle that's going to be printed here. But because of that strong run up, and it's not meandering up, it's not kind of going sideways and then inching its way up, it's running up, then I really want to protect that. I really want to protect that. So if it's a 15 pip target and it goes up 10, and kind of rockets up 10, I might say, you know what, if it's gone up that quick, after my entry, then I'm probably going to protect that as well, and put my stop at break even, or maybe even +1. If some guys have brokers that you got to pay a little commission, that's fine. You can do it +1 to pay for that. But you'll get the hang of that, and you should get the hang of that. I'm showing you what I'm doing, and you've got to kind of massage it to make it your own, based on your what broker you're using, and your account size, just your own head, and but that's kind of where my head is at. I'm watching the price action. If it's running up, if it's heading towards that profit target quickly and strongly with some real force, then I say, okay, well then hit my target, damn it. And if you don't, it might pull back that hard too. Well, I don't want to mess with that. If it does, I'm going to get out flat. I'm never going to let a trade like that go against me. Whereas I'll give it a little bit more room. I'll take the full stop. If it kind of meanders and kind of goes sideways and hums and haws, and it doesn't just blast up. So keep that into consideration when you're setting your stop to break even. What else? What else? What else? Oh, the range bars. Everybody's been asking me about the range bars. That's coming next week. I mean, I've got the script, but I got to do that video. And putting these things on MT4. MT4, everybody else has these. Like, that's not a magical chart. Like, everybody has them. TradeStation, Ninja, multi-charts. Like, it's a very common kind of thing. So it's too bad that MT4 doesn't have them so readily available. So luckily there's been a script built, and this is my copy of the script, so I'll send that off to you guys next week. So keep an eye on the blog, and you'll see that. Also the articles that I've been, I guess articles, it's too fancy of a word, the posts. I hope you guys read those. I'm not just scraping this stuff from the web. Like, this is, I write these out. Like, these are my kind of thoughts, such that they are. I mean, and I really believe in them. This Trade U one, you've got to find the right circumstances, the right product to trade. It's got to suit you. And I think for most people, it's going to be currencies. The Forex market is going to suit most people because of the timing. You can trade kind of 24 hours a day, although the Asian market's kind of dead. So, but that London-New York overlap, everybody can catch a piece of that. Typically, depending on where you live in the world. So keep an eye on these articles. The Trade U one, boy, that's important. What makes a successful trader? That everybody else talks. Not everybody else, but the initial thing is, well, you got to have discipline. You got to be well funded and all that kind of stuff. Which that's true. But the first thing that I thought of was, based on the guys I know and me, is you've got to like this, man. You've got to want to do this. You've got to enjoy what you do. And trading is absolutely no different. Because of the time and effort that it takes, you got to enjoy it. So that's a big one too. Have a great day trading and lose money. Again, it happened to me this week. It was a great trade. It lost money. Who cares? It was a great trade. Loved it. The trade aftertaste one, this is a good one too. And you know what? You can add this into your spreadsheet. Add a column into your spreadsheet as well. Is the 4 kind of trades that I outline here. Is you took the trade, it met all your requirements, and it won. The next one is it met all your requirements and it lost. The third trade is it didn't meet your requirements. It was some flyer, or you heard somebody on TV say the euro was going up or whatever, chat room, whatever, and on Twitter, and it wasn't your plan, and it ended up to be a winner. And then the final one is you did something stupid and it was a loser. So hopefully you're taking 1s and 2s, because that's what's going to keep you out of trouble. Then the third one is really dangerous. That's a real dangerous one, because that if you get a string of 3s, you can really get hurt, because you start to get this, hey, this is working, this is great, I'll just keep doing this. But it has nothing to do with any plan, and it's just basically you getting lucky, and luck runs out, and you never want to trade based on luck. I mean, sometimes as traders we do get lucky, but we can't start that as our basis for a trading strategy. Is, well, I hope to get lucky. That'll kill you. So that's a good one too. And you can throw a an extra column in there and just hold yourself accountable to where these if a trade you took falls under one of these four things, label it as such, and you can go over it and review it. Next item. Oh, EAs. A bunch of people have been emailing me asking me why I haven't talked about EAs or mentioned EAs. And the short answer is the vast majority of EAs are junk. And that's it. That's the short answer. And the little longer answer is I have an EA. A friend gave it to me, and then me and another friend had it coded a little differently, and we've been running it since November. And it hasn't had a losing day. Now the wins aren't huge, the losses aren't huge. It hasn't lost yet, but it's not like I'm making 1,000 pips a day or whatever. So but it has not lost since November, and I don't expect it to be honest. Now, having said all, I'm not telling you that to brag or sound cool or whatever, but just so you realize, an EA like that, I would never sell. Never, ever, ever would I sell that EA. The most I would do with it is have set up like managed accounts. So I would trade other people's money using that EA, but I would never ever sell it. So if I'm not selling the EA that I've been watching for almost 3 months and hasn't had a losing day, why would somebody else? So keep that in mind next time somebody's trying to sell you an EA. Now there's there's a couple of guys that I might give a chance at having a look at their EA, but like it's just not my bag of tricks. Like it's just so far beyond me. Anytime I get an EA, I've got a coder. I send it to him. He does all the testing on it, and it usually comes back crap. And if it comes back so-so, then we'll throw it on a demo account and just let it chug along for basically till it blows up the account, which usually happens. So it's such a non-starter for me, EAs. So, and I know everybody wants that. Everybody wants an EA that just does it all and doesn't do anything. If that's the case, then you don't want to trade, and that's okay. Nothing wrong with that. But those EAs and manual trading are they're just so different. They're apples and cats. They're just so different. One, you want to do this. The manual trading is you want to do this. I want to be involved. I want to be the guy. And you really want to trade. EAs, you're just looking for something to. It's a shortcut, and seldom do shortcuts work in anything, in any walk of life. You want to be a doctor, can't take a shortcut. You got to study. You got 10 years of schooling or whatever it is. So trading is no different. So sorry to piss on the EA parade, but that's just how I feel. Other strategies, I was testing 2 over the last few weeks. They've blown up. They were kind of going sideways, the up day, down a day, up a day, down a day, and then they started to just go down, down, down. So I've thrown those to the curb. But I've got another batch, and one looks real promising, and I should be putting that into demo mode shortly. But I'm just doing some back testing, manual back testing, just scrolling through charts. Usually on the weekend, evenings, I'll just scroll through charts and watch for the setup and see how often it happens and try and get a feel for what time of day it happens best, that kind of stuff. So I am looking at one that's, pardon me, pretty reasonable. So let's hope that something comes of it. But if not, whatever. I'm still loving the hidden divergence, and why wouldn't I? So that's it, guys. I'll keep you guys up to date on anything I find, and hopefully you read any of the articles that they're under uncategorized, because I don't know what else to call them. So that's where all those are, and I'll try and do a couple of those a week. Just different thoughts that I'm having, and just chats with buddies that topics we kind of talk about, and I think it might be useful to you guys. So check those out, and next week which will be last week, January. Wow. The 25th is Tuesday. Let's say the 26th, 27th, Wednesday or Thursday next week. I'll have those range bars out to you guys, and then we'll go from there. So have a good weekend, guys, and we will talk to you next week. See ya.